This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be going over the data sets and the SPY technical analysis for January 15th and January 16th. I will not be putting a video out tomorrow. I am going to be taking Friday off because it is OPEX and I generally do not like trading on OPEX days. So with that said, let's go ahead and jump into what we're expecting over the next couple days. Now, today we had the PPI data come out, and it did come in slightly hotter. Some of it came in slightly cooler, though. As you can see, the core PPI month over month for November came in at a 0%. However, we do see some of these, the core PPI for October came in slightly hotter. So this is kind of what I was talking about with yesterday's video, how some of these data sets are showing all the way from September, October, November still. And it doesn't truly reflect the absolute current conditions right now. Um, I'm going to jump into the beige book here in just a couple of minutes, but overall, we did have some otter data today, but we did see the treasury yields pull down quite nicely. We did see quite a bit of money enter into the treasury market, um, which does mean that people are starting to hedge long-term positions, even if slightly. So, overall, today's data was hawkish, but we do see a little bit of dovishness as well. The Atlanta Fed GDP did come in slightly hotter. It's at a 5.3%. I want to say that's because a lot of the data, however, again, this is the GDP now in the absolute current moment. So there might be some current data that they're looking at that's prompting this type of increase in GDP. Oh, excuse me. However, I'm not seeing that just yet. Um, so far from what I've been seeing, this has largely been attributed to the lack of imports. Due to the lack of imports, that causes essentially cash on hand, which adds to the GDP. So I have a little bit of mixed feelings about this GDP being so high right now, especially when our exports and imports are a little wonky due to the tariffs and everything else that has been going on. Now, with that said, on Thursday, we do have some of the export and import data. We have the jobless claims, and that's all at 8:30 a.m. We also have the manufacturing index for New York and Philadelphia, and you'll also have the Philly Fed employment for January. That's going to be a pretty important one, even though I don't think the market's going to be super, super keyed into that. And truly overall, I'm not really anticipating any of this data to significantly affect the market direction for pretty much the remainder of the week. Now, the reason why for that is we have OPEX on Friday. Generally, OPEX is an extremely, extremely controlled, both buying and selling to a very specific strike in terms of every single symbol. So the markets are kind of set for that day. Um, Unless we have, again, something outside of the norm, if we have the Bank of Japan starting to sell equities and sell treasuries and things like that, because I know the yen has been down very, very, it's been pulled down very, very heavily. And because of that, the Bank of Japan has to continue selling securities to prop up the yen. So we saw a little bit of that over the last two sessions. I don't know if we will continue seeing that going forward. Again, I will not be here on Friday, but one thing that we can do is specifically for OPEX is that you can look at um the max pain within the options. you can look at the gamma and where the gex is at, which we have that tool available in our Discord. Um, but overall, I'm really not anticipating the market having an adverse reaction from any of this data. The data this week was truly the CPI on Tuesday and the Wednesday PPI. Now, again, we did have the beige book. The beige book had some mixed signals, but overall, it did paint a picture that basically the economy is going sideways right now. We're not really seeing growth, but we're not really seeing major weakness just yet. The labor market was not doing massive layoffs or anything during the holiday months. However, they pretty much did not hire at all. I mean, they specifically stated in the Facebook that the hires were next to nothing aside from some temp hires. And this way they just ensure that they actually do have enough staff on hand in case there's any sort of retailer volatility event, and that means not in terms of stocks, but major buying or selling for a holiday, um, anything else like that. It's the holiday season, and even though we're exiting it, that was the sentiment going into it and while going through the season. So currently, the Fed is really suggesting that the labor market and the economy overall is heading sideways. Now, that doesn't mean really hawkish or dovish, but overall, the beige book was dovish. It just wasn't dovish in the fact that we were seeing massive continued weakness or anything. It was just dovish in the fact that um, previously full-time employees were not even replaced. Again, the hiring was pretty much next to nothing, just that there was some temp hires added just in case they were actually needed. And that a lot of these companies right now feel more comfortable having the temp hires over the full-time employees because the temp hires allow them to um, reduce workers, reduce hours, increase hours as necessary. Now, going into again the rest of the week, things should be pretty calm, things should be pretty relaxed. The PPI was hot, the CPI was cool. A part of the PPI was cool. Um, so I'm really not expecting any sort of major data set or anything to cause the yields to pull up, to cause the dollar to pull up, and to really increase the selling from this point. Again, unless we see the Bank of Japan or some sort of black swan type of event. But the next 2 days look very good.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the SPY technical analysis, as always, let's ensure our daily time frame, moving averages, and Bollinger Bands are turned on. And I am going to go over this fairly quickly tonight. Apologize if the video sounds choppy. I've been having to cut the recording quite a bit because I've been having an extremely busy night. Anyway, let's go ahead and jump into this. Let's ensure the daily time frame, moving averages, and Bollinger Bands are turned on. And today we had a little bit of selling. The high of the day was 691.72. And the low of the day was 686.04. Now, I apologize, I'm not showing the standard moving average banner that I have up there, but I will go ahead and just read the levels as necessary. Now, with us hitting the low of 686.04 today, that has us testing this very important level, which is the 20 MA. And we talked about this in yesterday's video that if we saw selling from the 5 mod today, that extremely likely that would take us right to the 20 mod. And lo and behold, here we are. We had our 20 mod test. And where do we go from here? So from this 20 mod test, and again, I am going to scoot back in the chart just a little bit to really hammer this point in, but when we get to the 20 mod, generally what happens is that you will see buying all the way to the 20 mod, all the way up to the upper Bollinger. 20 mod, all the way back up to the upper Bollinger, 20 mod, upper Bollinger, back down, 20 mod, upper Bollinger, 20 ma breakdown. Okay, sometimes that will happen. Again, if you're above the 20 ma, that's bullishness. If you're below the 20 ma, that's bearishness. But generally, and this goes back literally years, that when we get to the 20 ma range, that's generally a push upward. Okay, unless we're in a short bear trend, something like that. But generally, the 20 ma tests are ways to grab liquidity and push upward. Now, a few things I want to look at with this potential liquidity grab is that the ADL on the daily time frame is showing massive inflow. This isn't something you generally see on a true selling day, and this is somewhat what I was talking about in the Weeble post that I posted earlier. Apologize if you did not get a chance to read that, but I mentioned that I didn't really believe that the selling was going to see continuation past the 20 ma. And the reason why I said that is because one, we were seeing semiconductors having a little bit of selling, but not major selling. Two, we were seeing TLT seeing fairly significant strength. Three, we are seeing Bitcoin having a lot of retail buying. So when retail is generally afraid of entering into equities, and that's because of selling. Remember, majority of retail does not short the market, and that also includes taking puts. So when retail sees a lot of selling, generally they go to two different things. They'll go to crypto and they'll go to meme stocks. Well, we did not see meme stocks being bought today. We did see crypto being bought, but it was bought a little bit, not majorly. We saw it pull back just slightly, and we again from that pullback we did not see any of the memes running. And we saw once that 20 mod test or once that 20 mod level was actually hit, it pretty much bounced right out of that range back upward. Okay. Now, generally from these 20 mod tests, what we anticipate is upward consolidation back to the 5 mall, as the 5 mall will consolidate back downward towards the market price. Now, this consolidation here isn't going to be very large. With the market closing at 690.36, the 5 mall is currently at 692.57. That means that it'll be pulling down probably towards the 691 80-ish range, give or take a few cents. So even with today's close pulling that 5 mod down very slightly, it's still holding above that 690 range. Technically the 691. And with the overnight and where the market is right now, we're at the 690. So only $1 away from having that upside 5 mod test again. And even though I've been extremely bullish, again I see quite a bit of bullish structure in here, and I do believe that this is going to lead into bullishness as well. Um, with this 20 mod test or with this 20 mod bounce, if we see the 5 mod test done or taken tomorrow or even on Friday, and if we see buying happen at the 5 mod, that's going to take us up to that upper Bollinger at this point because the liquidity has been grabbed multiple times. We've grabbed it in this 20 mod test just 2 weeks ago. We grabbed it in this 5 mod slash 10 mod test just 4 sessions ago. And then again, we grabbed more liquidity within the 5 mod, 10 mod, and 20 mod. Now, This selling would have to continue probably for another 2 days and would have to push down this 679.60 range to really solidify that this is going to create a selling trend because again, this is a ton of bullish structure. We have a, of course, all my drawings are messed up. That's because I looked at it on my phone earlier. Um, we have this selling channel, and I am going to adjust this very, very slightly just to really catch this all. So this is the hourly time frame, and we do have a little bit of a selling channel here. This could probably be defined a little better, but we're going to keep this for now. Um, we did reject this bullish structure, so I am going to delete that cup. Going to delete this top of the handle, even though we did technically have this create a cup right here, this handle was rejected downward. So this inverse head and shoulders did not play out. And where are we left with here? So I did talk about in yesterday's video how potentially we could have this inverse cup close down towards that 686 range. And technically this does look a lot like an inverse cup. And the reason why is because not only did we have the cup close to the downside, but we also have the bullish structure being created at the top, technically bottom of the cup, um, which is suggesting that we will get this structure to pull back upward, retest liquidity, and to continue pulling downward. Now, again, if we see buying at the actual 5 mile level, that's going to be telling us that this selling will not last very long. We do have a very, very key level here, which is this, excuse me, it's this upper consolidation channel at the 691.76, which is pretty much right on the high of the day. And if we cannot break above that level again, and that's pretty much where the 5 mile is going to be tomorrow. So if we do not break above that level, if we do not see buying above that level, then the likelihood is we will continue to reject downward. And if we continue to reject downward, then we have the major possibility of starting to enter into these prior liquidity ranges. It's not something we want to do if you're bullish on this, then you don't want to see us sell down into these ranges because once we enter the top of this range, the likelihood is that we're going to pull all the way to the downside of that range. So I'm not seeing a whole lot of signals again that we're going to continue the selling. We did, however, see the VVIX run upwards quite a bit today. It got all the way up to, I want to say, almost the 112, yeah, the 111 and 80. And from that range, and I almost called it right when it was at that point. That's when I posted my Weeble post and said, I'm seeing a ton of tapering in the selling, and I was also seeing tapering within the VVIX as well. And sure enough, we were starting to pull downward. We're still in the danger territory, and just very, very quickly going over this. If we're in this red zone or above, that means that very, very likely we will be seeing selling on the SPY. And we did talk about how we have not seen a VIX pop in quite a while. So we were somewhat anticipating it, even though I was personally bullish on the market. I'm still bullish on the market. I do believe that this will turn into a 5 mile retest and a bounce to the upside. We've been seeing, again, a lot of bullish structure. Sorry, I'm trying to get back to the SPY really quick. But we've been seeing a lot of bullish structure overall. And that is telling me that very, very likely um, this is just an extended handle on this larger cup. Sorry, it's hard to talk right now for some reason. Very likely this is an extended cup right here. Okay. I'm going to delete this prior cup just temporarily, but very likely that's what we're seeing here. And from that extended cup, we're now having that handle back up to the upside. So again, my expectations is pretty much for this thing to turn into a large V all the way back up to the all-time high. And from that all-time high, create the liquidity to continue pushing back upward. So that's the expectations. Make sure you're watching the VVIX over the next few sessions because it's going to be extremely key in telling you if we're going to keep this selling, going or not. Um, Again, if you're bullish on this, you want to see the VVIX pull well below the 92 range, and truly you want to see it pull below the 88. Now, a few concerns. The USD JPY is extremely elevated still, and we've been talking about this for a few months now, as we've been climbing back up towards this 160 range. This is the range where in 2024, at the end of July, I always forget the time, but it's at the end of July, the beginning of August, that we had that massive, massive correction, um, caused specifically due to the Bank of Japan having to sell securities and raise or buy a lot of the yen and raise the price of it, and that's what this large uh red candle is to the downside. This is an inverse chart, or in terms of the correlation of the USD to the yen. So again, we're at this very, very dangerous range. Every time we start getting to this range, we see major, major selling. And this is last year's selling with the yen. This is the where we had the January selling towards that April. Um, this perfectly illustrates that selling. Um, this pulling back upwards almost perfectly illustrates the buying on the SPY. So very, very concerning that this is at such an elevated level. If history remains true, then this is telling us that very likely we're going to start seeing this pull downward, and that is caused by the Bank of Japan having to sell tons and tons of securities from crypto to stock equities to treasuries, all sorts of stuff. Bitcoin is continuing up this channel that we've been discussing for quite a while now. It has truly rejected this bottom range that we were very, very concerned with, and that was that 74.4 thousand. From this buying so far, and we are at a concerning level. This is the bottom of a major consolidation channel. So if we don't see buying above this channel, then the expectation would be to sell downward from the top of or from the rejection of this channel into that major support range. However, again, everything is looking very, very good on Bitcoin so far, unless we have um, selling from the Bank of Japan or something. I'm really not anticipating a major dip in Bitcoin at this point. Let's go ahead and look at the dollar. The dollar is elevated again, but this kind of runs in tandem with the USD JPY. And let's look at TLT. I know I had a very good day today. And again, with TLT, we are seeing, and I do need to adjust this buying channel for the dividend, but we are seeing support being built on the bottom of this major consolidation channel. And as we've been talking about, with the bottom Bollinger being, thoroughly, uh, you know, the liquidity grabbed from it, we have been seeing buying to the upside, which is heavily, heavily suggesting we're going to see a continuation within that buying, a continuation of this major buying channel, and that means moving back up towards that 91 range. So, with that said, everyone, it's a lot to go over. I apologize, kind of making this a very, very quick video tonight, but there was a lot to cover and not a lot of time. Again, I am bullish on the market, but if we reject the 5 mile tomorrow, that's going to completely change the direction of me being bullish or not. If we reject the 5 mile tomorrow, that's heavily, heavily suggesting that we're going to sell not just to the 20 mile again, but below the 20 mile, and that's how you get the lower Bollinger. So even though I'm not really anticipating a sell all the way down to the lower Bollinger, sells like that can happen. So just be prepared. Make sure you're watching your levels very, very closely. If we have that upside buying towards the 5 mile, again, watch the VVIX to see if there's buying or selling, and that will tell you almost exactly if we're going to head up to the upper Bollinger or if we're going to continue this selling back down to the 20 mile and down to the lower Bollinger. With that said, everybody, I hope you have a great rest of your week. I hope you have a great weekend, and I will talk to you in Sunday's video. Take care, everybody. Trade safe, and thank you for watching.